FunSupermart.com.
In the asset management industry, not many fund managers are turning bullish at the moment. What's your outlook for Asia for 2012?
Well, it's interesting that you mentioned that not many fund managers can be bullish in this sort of environment. And I think part of the problem is that too few fund managers are prepared to look longer term. Well, perhaps short-termism is an occupational hazard for us because we are always under the pressure of delivering performance, especially on a quarterly basis. So I think that to be a good fund manager, to be able to spot the trend and seize the opportunity, we not just have to be good thinkers, we have to be able to stand against the crowd as well. So it takes a little bit of strength in the personality to be able to do that. Sometimes people ask me whether I'm contrarian. What I demand of myself is that I'm able to stand my ground. And whether or not I'm contrarian is actually quite irrelevant if I stand my ground well and believe in what I can see for the next 1 year or 2 year or 3 year. Now, as far as the outlook for 2012 is concerned, we've got to go back to where we came from and where we're going forward. Back in early fourth quarter last year, we already turned less bearish. And at that point, there were a few factors why we made that decision. First of all, valuations. After the stock market sold off in August and into September as well, valuations were very cheap. And at that point in time, of course, people were extremely concerned about what's going to happen in the EU. But in the US, things were actually starting to recover. Now, of course, at that point, there was still a big question mark whether the growth will be derailed by the EU. But if it don't, then I think the US economy ultimately is going to be more important in the context of global economic growth than the EU. In China as well, I think growth momentum continues to be very strong. In fact, too strong because inflation became a problem and they were trying to manage themselves down to a soft landing. And I had the confidence that they will be able to do that. And when they can achieve that, which I was quite sure at that point they could, then basically the multi-year growth story is essentially intact. So if you take a slightly longer term view, in other words, don't look at what will happen in the next quarter, but look at what happened in the next 1 year. In fact, the opportunity in 4Q was actually quite tremendous. And the recent economic data just serves to add to our confidence that that's going to be the case. Now, the big risk is still, for this year, it was the biggest risk, and it still is the biggest risk in my view, is the EU sovereign debt crisis. How they were going to resolve that. Now, back in 4Q, we can see many ways they can resolve it or just stop it from getting worse. I think it's a matter of political will as we know it. The process was very noisy, but we cannot find a reason why policymakers would actually let the whole thing spiral into a chaotic situation, like for example a breakup of the EU. So so our bet at that point in time is that somehow they will muddle through. Somehow the politics will fall into place. It may take a little longer, but it will fall into place. That proved to be correct, and we still hold the view today that step by step, even though it may take a little bit longer than financial markets expect them to, but step by step they will muddle through. And as long as the situation don't get any worse, I think the growth in the US and the growth in Asia will remain quite positive as far as equity markets are concerned into 2012.
What sort of catalyst do you see driving performance?
I think ultimately it's back to our investment philosophy of buying into good companies that are riding on the very strong positive themes and buying the stocks at cheap valuations. I think as long as the first two is concerned, we think it's still very much intact. So barring any severe crisis, I think these sort of dynamics, the growth dynamics will bring the equity valuations up. And as companies do better, grow their earnings, then that will carry us forward as well. As far as valuations are concerned, even though there has been a pretty encouraging rally for the last few months, but I think we're still far from the expensive territory. So I think the way I see it now, all three engines are still running quite healthily, and what more catalysts do we need than these three enduring ones?
You mentioned Europe as a risk just now. So are there other risks that you see in the market?
I think there's always the unexpected. We don't know what it will be. For example, the Middle East security issues. That is always there. But I think that as far as the security issues are concerned, the big picture for Asia has to be what you see in the papers recently, how US calibrate its engagement with Asia. Again, our funds are very much focused on Asia, and how China is responding. Within Asia, I would say that actually the risk is improving. For example, the recent presidential elections in Taiwan. With the KMT win, the cross-strait relation between Taiwan and China is also improving. In Thailand, you see Prime Minister Inlat Shinawatra, in fact, getting more traction as far as policy is concerned. In Indonesia as well, inflation also coming down. In India, the inflation is also trending down, even though still high. So I think compared to, say, 5 years ago, I would say that the political outlook for Asia has improved. For Asia compared to the EU as well, our balance sheet is so much better. And therefore, I think that I would say that if the EU can stabilize, then I think you look at some of the big picture risks now, it is much better than, say, 5 years ago when the US hasn't found out that there's something called a Lehman crisis. But now we know that has blown up. EU has also, sort of quote-unquote blown up. And now if both the US and ultimately the Europe get on a recovery path, I think that would actually, in the end, be quite a positive macro outlook for the world as a whole, on top of course, the Asia growth story.
What's one theme you strongly believe in?
There are multiple themes in our portfolio. But there are a few important ones. I mean, there are like 3 to 5 important ones at any point in time. And one of the themes that we have populated in our portfolio for a couple of years now is the China urbanization theme. Now that theme has many sub-themes that come along with it as well. But if you look at the pace at which China is urbanizing, it is expected, I think they have like 600 over million people living in cities right now, and it is forecasted that by the year 2030 there will be 1 billion people. That has got to have a lot of investment implications for companies in this region, not just for companies that are listed in China, but companies that are listed elsewhere in the region. Like for example, in Singapore and Hong Kong, there are many companies that are investing in the retail property malls across cities in China. As the population in those cities grow, I think the consumer dollars spent would grow with it as well. And a lot of these retail malls would be beneficiaries of that. Now, there's also another team attached to that called the China consumer team, but these teams are all interwoven. I think as we understand these teams and link them together, we get this picture of the Asia growth story. And this is what we're putting our investors into, buying into the Asia growth story.